The world of finance just witnessed a seismic event, the legendary $60 silver. Maginot Line has finally collapsed. A price barrier defended for decades by banks, governments, and powerful institutions is now shattered beyond repair. Silver is trading above $61.75, signaling a shift that was never meant to be public. This wasn't a simple market rally. This was a controlled implosion marked as volatility to calm the masses. Because the truth leaked through the cracks, the system cannot deliver the physical silver it promised on paper. The financial world has now stepped into the first phase of what experts call a global soft default. A soft default occurs when markets appear functional, but cannot honor foundational contractual obligations like physical delivery. For years, $60 was marketed as a natural resistance, but now we know it was engineered suppression. Like the historic Maginot Line, built with pride and concrete confidence, this financial defense was considered unbreakable. The French believed their wall would protect their borders forever, until the enemy simply went around it. Today's Maginot Line was constructed with derivatives, futures, leverage, and the illusion of limitless paper silver volume. More than 200 paper ounces trade for every 1 real ounce mined from the ground. System mathematically engineered to collapse the moment enough people request actual physical ownership simultaneously. This week, that request arrived louder than suppression algorithms, louder than banks, louder than the system. Industrial users began demanding guaranteed delivery, not settlement credits, not IOUs, not adjustments. Solar manufacturing, electric vehicles, medical technology, military contracts, strained inventories beyond what mining operations could supply. Discoveries declined, operating costs soared. Geopolitical conflicts destabilized logistics, and investors refused to liquidate holdings. Meanwhile, nations like China, India, and Turkey accumulated quietly, draining Western supplies like a slow leak. The banks hedged, the governments denied, the analysts mocked, until mockery became silence overnight. The price broke not because buyers grew stronger, but because sellers lost their illusion of control. The day wholesalers posted out of inventory, confidence evaporated faster than digital liquidity ever could. The day delivery delays switched to unknown, a global alarm triggered behind closed boardroom doors. And when banks began offering cash settlement instead of metal, the soft default officially began. The public didn't panic because the public wasn't told the system had already changed. Elite decision-makers adapted while ordinary citizens were kept comfortable and uninformed. The digital financial battlefield shifted before retail investors recognized the strategic repositioning. This isn't just an industrial metal story, it's an economic survival and sovereignty story. Silver is no longer a commodity alone. It is a strategic necessity without scalable replacement. There are now less than 6 months of available industrial silver supply at current consumption rates. Recycling cannot fill the void, and expansions require capital, time, labor, and geopolitical stability. Investors are unwilling to sell, industries are unable to pause, and governments refuse to admit scarcity. The equation doesn't resolve through patience. It resolves through repricing, rationing, or priority nationalization. As shortages worsen, expect export limitations, military-first contracts, and strategic resource hoarding. For the first time, industrial demand is outbidding speculative demand, flipping a century-old economic model. Banks no longer dictate silver prices, technology companies and global industries do. The soft default means the market continues operating, but with altered rules and concealed consequences. You may hold a contract, but contracts depend on trust, and trust depends on delivery. If the market legally settles in cash, then the contract is technically honored, but practically worthless. We now enter a phase where the public believes they own silver the system never possessed. Digital numbers do not equal tangible ounces, vault capacity, or mining expansion. This event mirrors oil crises, semiconductor shortages, and currency collapses of previous decades. Every historic supply shock punished late awareness and rewarded early disbelief. The breakout above 60 signifies the start of silver's strategic recognition by major governments. Central banks are behind, multinational corporations are desperate, and investors are awakening. The quiet accumulation phase ends, now begins the loud revaluation phase. The fallout will reshape industries, rewrite financial policy, and challenge global reserve currency dynamics. Yield fixes will include media messaging, temporary taxation, futures adjustments, and settlement incentives. These tactics delay consequences, but cannot negotiate with physical reality, because you can print currency and you can print contracts, but you cannot print silver. The soft default exposes the fragility of systems built on leverage without metal backing. And once confidence erodes, systems shift rapidly, violently, irreversibly. The Maginot Line didn't fall in a day, but the moment it fell, the war changed. Today marks that moment for silver, a transition from ignored asset to recognized lifeline. The price chart isn't the headline. The failure to deliver is. Governments will intervene, industries will prioritize, and retail will react late as usual. The value narrative is no longer controlled by institutions, but dictated by scarcity. 3 truths emerge from this collapse that every viewer must understand moving forward. First, silver's breakout is not speculation. It is a supply-driven structural revaluation. Second, paper markets are entering irrelevance, as physical scarcity dictates global price discovery. Third, those holding real metal, not digital claims, now possess leverage they never imagined. The Maginot Line has fallen, the soft default has begun, and the world is recalculating. History proves silent collapses become loud consequences, but only after it's too late to adjust. If this message reached you before the world fully reacts, you are early. Like this video, share it, and subscribe to stay ahead of the next financial shift. Because the most important warnings rarely come from breaking news, they come before the break occurs. The question is no longer what is silver worth, but what is everything else worth without it? Prepare accordingly, because the markets are rewriting the rules in real time, quietly and powerfully.